Hello, ladies and gentlemen. It's a financial program on Pod TV, formerly IBM TV. My name is Sasha Star, and I would like to introduce my esteemed guests on the panel. First, Nick Poliveda is a founder of the network.
Hi.
Okay. Then I would like to invite Peter Bennett, our regular contributor. Thank you, Peter.
Hi.
And Roderick Mann. Hello, how are you, Roderick?
Hello.
Okay, good. So today is a nice day on the market. Seems to be, I don't know, at least my stocks are all doing okay, I should say. And I hope that everything is happening with your stocks and your positions. Peter, I would like to ask you, what do you think about this opportunity? I don't know if you are aware, there is one stock which is doing very well today. I have position in the stock, I must disclose. It's a stock by the name Tilray. It's a Canadian company involved in cannabis business. It's up 10% today. And I think there are two forces behind that stock. First of all, strong fundamentals, new CEO, and most importantly, I think it's a play on the fact that one way or another, U.S. will legalize marijuana, because now we know only 12 states have it regular. So they have. I think there are two steps. I think they have to first decriminalize use of marijuana, and second of all, make it legal in all or most of the states. So stock, I think it's reflecting just that. Do you have any opinion on that?
Well, I don't know the company itself. I have some general opinions. First of all, I think it's likely probably the United States will sooner or later, and probably maybe even sooner, legalize marijuana. It's definitely the trend state by state. Second of all, I've heard there's a lot of competition in that business, and that concerns me because there's so many companies competing. And my other concern is that I wonder how much people could possibly grow marijuana in their own home, because hydroponic gardening is increasing even in the home. My brother-in-law, I'm sorry, son-in-law, has a wall in his living room kitchen, which is about maybe 5 or 6 feet high and maybe 5 feet wide, and it's hydroponic gardening. So he grows vegetables, which are legal, and in New York State. But I wonder if people can't do hydroponic gardening of marijuana, and maybe in the end, this whole industry will be, not only attacked by the competition, but maybe by homegrown. The other side is, Tilray may be a great company, so I would have to look at it.
Yeah, one thing what's important is that stock happened to be almost $150 a while ago. So you're right. There's a lot of competition, but I think well-run companies probably will do quite well. Roderick, do you have any opinion on that? Oh, you're muted.
I would just. Oh, sorry.
Now you're
okay.
You're you now.
Okay.
Okay, Roderick.
Sorry. So I would associate that with kind of indirectly with some of the meme stocks that are popular. Just like the vegan meat, the burgers and the marijuana. There are certain trends out there that everybody seems to be interested in, and it gets the retail sector excited. I would look at that as a long-term thing, and marijuana has been around forever in places like the Netherlands, and it's becoming, and we probably will get the federal law, that'll stay signed. So it's becoming sort of a ubiquitous kind of a must. People don't really think too much about it. It's just a plant. And so I would be a little bit afraid that there's a premium on there kind of associated with that whole American thing going on right now with marijuana and some of the other areas.
Yeah, Nick, any opinion on that?
Absolutely. Of course, Sasha actually had a client that was making about $1 million a year in Colorado. That was net to him. He also paid all his employees. He was in what we called the growth industry. The problem is, of course, the state of Colorado allowed it, and the federal didn't. And that still exists today, and it's
Yes.
a big problem. So you have, number one, you have the legal hurdle. Number two is what Peter brought out. They don't call it weed for a reason, because it grows like weeds. Okay. And how can you protect your unique selling proposition if somebody can just drop a weed next door? So you really don't have a lot of protection on that as a product. I'm just looking at the fundamentals without the management of how it's going to be managed to be profitable. And so when you have something that you can't protect, the value becomes a lot less. With that all being said, Sasha, as you know, we have the crazies in the market right now, the crazy investors that run to Tesla, AMC, they run to BlackBerry, which I used to invest in, but not as a crazy, And so the real problem that you have today is you have the crazies that have funny money in the market. In other words, the people that really aren't long-term sophisticated investors, really haven't had a downturn in the market. They're the ones also that watch our shows, so I shouldn't be too critical of them. Okay, But the thing is, I'm just saying you have those out there, and they may push that stock up because they go, oh, it's got to be a great thing the next coming and all this other stuff. But if you're a solid investor over a long period of time, you're going to look at that to be, I would look at it to be very skeptical, because I don't know how you protect your technology. What do they have that another competitor can't come in and drive the price down? What do they do in Canada that's different? Now, my client, what they were doing was selling hydroponics to the people that actually did the weed stuff. So they had actually had a more of a unique selling proposition. But the people that are retail, I don't know. I don't know how you protect it. You tell me.
Um, I'm I'm not an expert in this business, of course. I
Yeah.
have very little exposure to it simply because my friend was invested in one junior company in Canada,
Yeah.
and I have a small position there
Sure.
just because the stock was so cheap that you couldn't
Yeah. Right.
resist.
Right.
But
It hurts.
it's not in any of my portfolios, and
Right.
it's just simply there. When stock going higher, I sell some of it, and when it goes much lower, I'm buying back whatever it is. But it's not even in my portfolios.
You know,
Um, apparently, they have a very sophisticated state-of-the-art technology to produce high premium products, which are actually in a big demand, including medical style products and so on. So they invested for I think it was 44,000 square feet facilities. They invested about well over $10 million, and they
Yeah.
have testing room, and they have sophisticated. They have, I think, 8 rooms, and they're going to 4 rooms to grow one style. Then once it's cropped, then there is a second 4 rooms that providing even more product and so on as they're rotating. So it's kind of they started recently a few months ago, and they're doing quite well. It's very small facilities though, so I would think that they will be acquired by one of the majors most likely, and if not, then they have to expand somehow. And
Yeah.
I'm sure that
well,
they can.
I think Nick makes an excellent point. I mean, Morningstar always talks about moats, and I
Right.
don't think there's a big moat. Now you're saying, okay, they have medical marijuana. Well, I know a friend who invested in a startup, and he put in like $200,000 into this, and it may work out very well. But he had said to me, this was a few months ago. He said, well, this company has a very high grade of medical marijuana, so they're going to succeed. So I don't think this company and again, is the consumer going to differentiate and say,
Sure.
oh, Silray has the greatest medical marijuana and this one doesn't? Either way, it's going to drive the price down because people are going to say, wait a minute, this company says I've got the quality medical marijuana for X dollars, and Silray wants to charge twice as much. So there's probably going to be a lot of competition in that marketplace.
I agree. Agree.
And it's a weird thing, and I doubt it. I don't even know what I'm talking about here, but I'm just throwing out the thought that maybe when marijuana is so legalized, at some point, maybe it'll become passe. Although people seem to enjoy it like drinking, so it's hard to say. But maybe it'll lose some of its luster, and people will say, okay, maybe this isn't the greatest thing in the world, maybe. But
Yeah,
I wouldn't bet on that.
What is really the demand? I mean, what you're looking at, Peter, is what is really the demand. In other words, is the demand that the whole United States can't wait to get stoned? I mean, come on. That may have been in the 60s, but we're talking, 2021, where it's passe to smoke, let alone smoke dope. So you got a real problem here in terms of the demand may not be as great as some of the marketers think it is. It's more of an emotional product. And how do you protect it? I mean, today, Sasha, the key thing is you have a technology, you have a product that cannot be duplicated at either a very expensive price to duplicate it, or the thing is you have a patent or some sort of protection on it. That's the reason I went into Pfizer. I was going, well, Pfizer goes out and they get all their drugs protected as long as they can, and that makes the pharmaceutical industry profitable. But and FireEye, the reason I went there, same thing. In other words, they have a unique product that is very difficult to reduplicate when it comes to cybersecurity. I had no idea they were just going to sell it the next day after I bought it. But by the way, the stock's back up to almost where I bought it for about.
Rod.
Oh, I wanted to say that in our MBA courses, we used to talk about what helps you make a lot of money, and it was always the same things, and it was the Boston Consulting Group for Plex and all that. But basically, when you have companies that there's no barriers to entry, it's not a big capital investment like semiconductor. You can't protect it with a trademark. And anybody else can do it. And there's already a bunch of competitive alternatives. And I'm thinking of not just pot, but I'm thinking of DoorDash and Uber Eats and Lyft.
Well, you know what? Sometimes the first movers, though, do have an advantage. But here there's not a first mover because I never heard of Silray, so they're not like dominant, and there's so much competition out there. But you did give me an idea, which I need to research this week. And I don't know if there will be anything available, but it's so hard to find good stocks now. I mean, it's really tough.
Really is.
The market is way up. Interest rates are down. I'll use this as a segue into a topic. I bought some treasuries this week, which I never thought I would do in the near future.
I didn't even think you ever do that. That's like parking.
I'll explain why and what my thing is. But my thought is, I wonder if, and this needs research, if there's any hydroponic stocks out there. It's people who are making the hydroponics, because people are going to decide, okay, now it's legal, I'll grow it into my own home. And B, hydroponics, is a big thing for, in the industry and in farming, by the way. There's a farm out in, I forgot if it's Missouri, that's now developing huge tracts of acres where they want to say, okay, hydroponic farming is the way to go. And actually, and this is hundreds of acres somewhere around there, and they have multiple plants, and I don't mean plants that way. I mean, gardens. But, so hydroponics is the future because in a lot of ways, because it can be a very efficient way to grow things. So it's an interesting idea. Yeah. Let me get into treasuries just to keep things moving a little bit, and because we spent 14 minutes on that, or some 10 minutes on that, which was interesting. And again, I'll look into hydroponics.
Roderick brought up another one, which I think is a dog. It's DoorDash. I don't know if you guys are familiar with when they had web grocery or whatever the heck they called it. It's already gone. I mean,
is it gone?
Web grocer or something like that. It was a .com stock.
Many years ago.
Yeah, I remember that. It was a big play. Oh, they're going to deliver things through the internet, and they're going to take over the completely dead.
Well, there is a lot of that out there now.
I know. Yeah, there's a lot of dead stuff
Fresh
out
Direct.
Right.
You know,
Okay. Here's the problem I have with DoorDash. Okay, which
Yeah.
I have with all the restaurant industries, and this has only been 37 years, including one of my good friend who actually invested in a restaurant industry. But every one of them, and where he made his money was he developed the soft lens. He's a PhD chemist for your for contact lenses. He made all his money.
Wow.
Then he decided I'm going to go in the restaurant business. He got burned like you could not believe. And I had another friend who was in the restaurant business. He goes, "You want to?" And it went public. He goes, "You don't want to know one of the worst businesses to be in this world is the restaurant business. Why? Very thin margins, a lot of labor issues, a lot of capitalization cost, and the constraints." Okay, he just said it's horrible. If you want to get rich, one way you don't do it is the restaurant business. Now let's go to another business that's probably just as bad, if not worse. Delivery of restaurant business. Okay, what does DoorDash do? They're trying to make money off of delivery. What is it? Labor intensive, capital intensive, swing intensive. Forget it. Yet it's a darling right now on Wall Street until people figure it out. And when they figure it out, it'll be like web grocery and everything else will just collapse. The only reason Amazon can stay in the delivery business is they're delivering all sorts of products. But if you segregated the Amazon delivery trucks, it just ain't there. And UPS, same thing. The reason they're doing it is they can charge more. But now you're talking about food. People are going to pay so much for food, and I think it's one of these momentum stocks that's it's going to be dead. The only question is when.
Yeah, it could be true. And the labor cost is going up through the roof, for all these restaurants. They can't get enough workers, especially until September, because the government's paying so much for people to stay at home. So today, they're raising prices.
And what's going to be your good news? What's going to be your breakthrough technology that's going to make DoorDash 200 times better than anybody else? Yes, Roderick.
I just kind of like the comment from Peter about the bonds. I just a couple weeks ago bought ZROZ, PIMCO zero coupon bond, and it's way up now. And I believe that these interest rates, the 10-year, hit about 1.62 or something. That's down around 1.5 already. And I think that's going to continue. So I kind of like Peter's comment on that one.
Yeah, I mean, my long-term theory, which I have 2 or 3 more points to add to this theory this week, is that interest rates are going down to zero in the next 8 to 10 years. But so what I did, I mean, I sold you.
So you think 1.62 is high?
Well, I bought 30-year treasuries.
What was the interest rate?
At about 2.25%, which is so pathetic. But the thing is, I had sold out of USAC to a point. I did tremendously with it. I mean, I bought some at 5, some at 10. I sold in the 15s. I've been getting a dividend, huge dividend in the meantime, but I kept 2.5%. But the thing is, there's a question in my mind whether or not it's going to have to drop its dividend due to cash flow. So I got a little nervous about that one. So I all of a sudden had even more cash. So I'm looking at it and I'm going, what am I going to do with the cash? Because there's the dividend stocks. Everything I have, I like. Right. TRP, TU, they've been going up. They're solid. I think they have a future. But what am I going to do? I could look at muni bonds at 0.6% for a nice safe state muni bond. But so I said, you know what? I'll put 3% into 2.25 coupon treasuries. But no. Let me restate: 2.25 yield treasuries. But the thing is, I went for the highest coupon possible because if you're going to buy low treasuries, you might as well get a nice cash flow in case rates go against you. So I found a 3.25 bond, 3.3, some of that, and also just as a note, I had bought for my wife in her IRA some treasuries maybe a few months ago, and I found a over 4% coupon. So
wait, where do you get the 4%? Oh, this is a corporate bond.
Not a yield; it's a coupon. Remember, you get the coupon, but you have to pay a premium for it.
That's what I thought. You got to pay a premium for 4%,
and that's amortized. So I'm getting 2.25% on this last trade, for instance. But I'd rather get the cash flow back. So so I get a nice big, payment back of 3.3%. Not that big anymore, but for these days it's huge. So I get 3.3% back just to reinvest in case inflation goes up. But it locks me in on 2.25 for what it's worth. But
Mhm.
But listen to this, more evidence of what I've been saying. First of all, I saw a study that said that if interest rates were to go up 3% higher than they are, and everybody's afraid of, inflation
Yeah.
and everything, and footnote, I can't resist saying this, the Republican Party has been arguing the wrong thing for 40 years. They keep arguing there's going to be massive inflation, and people don't believe them because there's not. And there's been some inflation in certain areas, but it hasn't blown up, and it probably never will. They should be arguing the opposite, that interest rates are going to zero and it's going to be a low growth economy. So anyway, this study said that if interest rates go up 3%, the debt service will be as high as the U.S. national budget for defense, and almost as high as we're paying for Social Security. Just on that, and that's on what they say the deficit is, which is maybe 27 trillion now. The real deficit is 200 trillion. So what does that tell you? Interest rates not only can't go to 3%, or they'd be paying so much out, it's probably going to 0.3% because it's 10 times as much.
Mhm.
So the only way they're going to keep the interest, from exploding, which I've been arguing all along. And second of all, I had a new thought, which is, what about long-term care? I've been saying exactly what I've been saying. Okay, Medicare is more money in the United States than all stocks, bonds, and privately held real estate. That's how much the U.S. really owes, roughly 150 trillion, 250 trillion, give or take 100 trillion. So but what about long-term care? Nobody's even mentioned that either. But you know what? The federal government, through Medicaid in the United States, covers the care for people who are impoverished because they just don't want them on the streets, older people. So that's another huge obligation. And again, I always have to throw this in, all the other countries in the world that I've looked at, and I've looked at Australia, China, which is in really bad demographic shape, India, South America, Europe, they're all in terrible shape on these unfunded liabilities. They're not worrying about the aging populations, but they're providing free health care. So that includes long-term care too. So now you have increased medical costs, long-term care, deficits through the roof. They're not going to want to pay interest rates. And the final point I'll bring out just this week is the Fed has been buying repos. And that's a way to inject liquidity into it, short-term repos, because they don't want short-term rates to go negative. So there you go again, more yield control, which is how they're going to keep rates down. And they're already fighting to stop interest rates from going to zero on short-term debt.
Yeah, but what do you do when Janet Yellen says, "Hey, we should bring interest rates up"? In other words, she's leaning on the Fed, and she used to be head of the Fed to bring interest rates up. See, the problem I have with the strategy is you deal with a lot of individual wackos out there. Your logic makes sense, but logic isn't how Washington, D.C. works, or in some cases even the Fed works. And they decide, oh, let's bring up the interest rates a point or two. That takes your Treasury portfolio and turns it into garbage. I mean, overnight.
Well, 2 points, a couple points, but Janet Yellen is now the Treasury Secretary, so she works for President Biden. So they're trying to pass big debt.
I know that. Yeah,
it is not big compared to what they really owe, but they're just trying to accelerate it. As a matter of fact,
but I'm just saying, if interest rates tick up, your treasuries look like a bunch of trash.
That's true of all my bonds, right? If I have a muni bond, if I have a bond, but here's what I'm guaranteed for what it's worth. Again, it's part of a diversified portfolio.
I was going to say, right?
Yeah, if I only had that, and that reminds me of something too. And I increased my gold as a hedge because I went up to maybe 4% or maybe a little more now because. You know what? That's my insurance because I'm 80% sure that I'm 100% sure governments are going to want zero rates. I'm 80% sure that they're going to succeed and not lose control. If they lose control, then real assets are where you want to be. And that's probably where you want to be anyway, by the way, because gold will do very well in a zero rate environment anyway, because there's no cost of carry. But you want to be in dividend paying stocks, probably stocks, real estate, property is going to go up at zero interest rates. But just in case, so gold will do well in either environment, probably, but especially that way. But let's go back to your question about the bonds. Let's say things go against me. First of all, it's only 3%, and my muni bonds expire in 7 years that I already had bought a while ago. I locked in over 2%, which was a big win. But for the bond, you know what? For the next 30 years, I get 3% back a year. in 30 years, I get the principal. If rates go up, then when everything else, like my muni bonds, expire, well, then maybe I'll actually get more than 0.01% on them. So it's a hedge against that. But if rates really go to zero, my munis are going to expire, and I'm going to be like, okay, now I get 0.1 or 0.2% on my muni bonds if I want to renew them. And it's a good thing I have dividend stocks and some treasuries for cash flow because, so it's part of a diversified strategy.
Yeah.
Peter, I have one question. I totally agree with you that interest rates either will go to zero or almost there at zero. How you mitigate the inflation while you keep interest rates at zero, and yet inflation will keep rising? It's not at critical level anywhere, but obviously it's rising here and there. Gasoline prices here, a little bit. Some food prices, of course, rising or so on. Especially, for example, in Canada, food prices are rising considerably because we have a lot of foods is brought from U.S., from Mexico, from South America, and so on. And probably transportation factor is becoming an issue here.
Absolutely.
By the way, as the transportation is concerned, before I forgot, I think we're coming to the point that it will be very advantageous, in my opinion, to acquire a position in UPS. Because it's been down today considerably. It holds its own in a way, but I think there might be a couple of more down days, or it will stay there to build the base. So probably in a few days' time, maybe a week from now, I think it will be quite an interesting position. I'm thinking about selling some puts on UPS.
You called NVIDIA right, Sasha. Did you see
By
what
the
happened
way,
to
yes,
NVIDIA?
finally I completed my
Unbelievable.
thought about
I think in the
NVIDIA.
last month it went up 22% this month. I mean, I'm just
And
going.
what I
It's
did
up from
on
about 600 to 700 in the last
I
month.
know.
Or so.
I was just going. Well, actually, it went from like 500 and change all the way to 700. I'm going like NVIDIA is just unbelievable.
Yeah, it's a
when
great
it,
company.
when
It's
it
my
reached a
favorite
level of
dividend.
600 and I saw that it's still climbing, and don't forget about stock split in July,
Yeah.
so I
Yeah,
figured
the
out,
four for one spot.
right. So what I did, I sold 600 put January 22. I got incredible premium for that. And once stock reached 700, I sold 610 June 22 call. So now I use the same strategy as Zoom, except that NVIDIA is much higher quality stock than Zoom. So I was, with a joy, implemented the strategy on NVIDIA. And then I think you have to wait. That's a little problem. So I'm not zooming
I sold.
NVIDIA.
I
Yeah.
had the 600 puts and I rolled them. It was really a good move a few weeks ago because I said, you know what, this stock's going to go so much higher, and there's a lot more premium. So I sold it. I moved into the 800 puts I sold, and I covered it with the 400 puts. But I think has a tremendous future. Without a doubt. I think because it's graphics, and they're going to have graphics in cars. They're going to have more Oculus type, video games. Everything's going to require chips. We're in the information age, and they've got the best chips without a question. There was a survey that showed who had the best chips, and they had 4 out of 5, and the company they're trying to buy, ARM, was in the middle at 3. So although if that merger doesn't go through, maybe it'll hurt them a little.
But you know what's interesting is that ARM merger has not been approved yet.
I know, that's what I just said.
But they're already selling their products and building their products. What they did, they agreed to pay them royalties before it will be acquired. But still, they have incredible line of products. And sometimes I'm asking myself, as a stock in NVIDIA, why wouldn't you forget all those ideas of diversification and just have play on that one stock, and you don't need anything else?
I like a little diversification. I like Amazon a lot too. I like Microsoft a lot, so I've sold puts on those. I like Google, but it's so high right now. And also there's a tax that's coming into possible play. This last weekend, the G7 approved a tax of 15% on all companies, a minimum tax. And, it's something that Yellen's been pushing. But it's not approved by all these countries. And I've looked at the effects of it. It could hurt these companies a bit. It also could, by the way, a very good point is if they raise that tax over time, it could hurt them more. That said, when it comes to Nvidia, Microsoft, Amazon, and probably Google, maybe I'll get back in at some point. These companies are growing so fast they can outgrow it. Plus, they can, there's tax advantages. They can maneuver things. So I think that the tax won't hurt them too badly if it even goes through. Back to your.
The tax will hurt not only Nvidia, but all other their competitors as
Oh
well.
yeah, it'll hurt a lot of international companies if they're playing the game of having a base in Ireland or one of these lower tax countries. But in the end, everything will adjust, and also prices will adjust. It might cause quote inflation. So that which is, and here's the thing. So I think first of all we're definitely getting short-term inflation. ODC Oil Drum Corp, which I have 0.5% in, just announced their quarter was not very good. Only their sales were okay. Everything was good except for their profit margin wasn't good. And they said, well, it's going to take 60 days for us to increase our prices, but everybody needs their products. So I still like the company, but it just shows. Chipotle today said they're increasing their prices 4%. So all this is going to pass through, but I think it's mostly what a lot of analysts are saying, transitory in one sense. So in the near future, I think maybe 6 months a year. First of all, in September, everybody comes back to work. In the long run, robots are going to start replacing people anyway, and that's going to reduce costs. But I think all the long trends, so that'll keep inflation down to a point. But the problem is, for the investor is, even if inflation is running at 2 or 3%, as an example, let's say it's only running at 2. If you can't get 2% very well on everything. So I think the stock market will continue to go for a while, but eventually it's going to hit where economic profits have maxed and interest rates will be low. The stock market will be low in 5 years or 3 years or whatever. It'll start planing off. It'll be very hard to stay ahead of inflation, which will ultimately maybe create a very low growth economy, in a world that's aging, unfortunately. Although the only last plus I'll add is I thought of one thing. With all these people who are aging around the world, there's going to be a lot of jobs for people to take care of them, even if robots help. So that might help with the unemployment situation of robots replacing, because so many people are going to need long-term care help, and medical help. So maybe that'll offset things.
Yes, Roderick.
I was going to say, with the inflation, and we'll get some CPI number tomorrow. One of the ramifications of that is essentially we're like most of the rest of the world. We've got negative real interest rates at that point, and it looks like that's going to go for a while. So it'll be interesting to see what the CPI is tomorrow for the month of May. It'll also be interesting to see how the market reacts. And I'm also kind of anxious to see what happens to GameStop this afternoon when they announce their earnings, because that's been like a circus sideshow to watch that and AMC and all this other stuff that's going on.
Mm-hmm.
Yep.
Another stock, what I think maybe as an idea to acquire, it's an old IBM stock. Believe it or not, it pays dividends 4.4%. And what I heard just today, that they have a new chip developed that is on par with the best Taiwanese products. And of course, we all know that. How you call him, Uncle Joe? He's planning to a big infusion of cash into, including high-tech industry, and of course, IBM probably will be first in line to go part of that infusion. So I think prospects of IBM are, in my opinion, quite healthy. I'm not sure about. Yeah, it's up to date. And well, again, I will look into selling a couple of puts here and there.
I already took a position in IBM several months ago, so I'm up pretty good in this stock. I think I bought it close to it might have been
120.
No, I didn't get that for a low, but it was like in the 130s. I think I got it around 130 a share. Now it's up to 150. See, my problem is, Sasha, I don't like to spend 150 a share for something I just bought 2 months ago for 130. I have a real problem with that.
Yeah, it's
So
hard. It's hard when
it's
you.
really hard to do that, saying, okay, I'm going to pay a premium for something I already bought.
But but
I agreed with you several months ago, so that's the reason I made the purchase of the IBM. But I got it like, I think around 131 a share. I'll have to go look at my basis on it. It was pretty low, you
yeah,
know.
but
Well, you know
hold on. I think we're talking about something interesting as a trade management.
Yeah,
If you still believe that it's a sound company and its stock has potential to move higher, and I believe
yeah,
so, and let's say you bought say 1,000 shares at 130, and you'll buy
right.
another 100 at another 1,000 at this price, 150. So
Yeah.
your average price will be 140 with the stock trading at 150. How wrong
Sure.
can you be on that
Well,
transaction?
not too wrong as long as they pay that dividend, and that's the reason I got into it. Was the dividend looked pretty good, Sasha?
Yeah,
You know, but
what
they were
else
saying is maybe do it, maybe play on top of what you already did. I'm looking for a dog stock. In other words, something that is. See, UPS I thought was interesting because it just took a dive today, so you know. It's got some opportunities on UPS, and I don't have UPS, so that's the other reason. Where IBM, I already got IBM, so why do I want to
Yeah,
double up
okay,
on?
for diversification purposes. The only
Yeah.
thing is, I'm not sure. Well, you never buy at the bottom. It's nobody can do
No,
that.
you can't do that.
I want to watch UPS for 2, maximum 3 days, so at least it will hold on that level.
Right. But
If it
the
will hold on
other
that
thing
level,
is,
or even move a little bit higher, I have no problem with that. I will sell a few puts for
but the
sure.
other thing is UPS going to make a better move after we get? See, I'm looking for post-pandemic stocks. What's going to do well? Because, and of course, other people are doing the same thing. What's going to do well once this pandemic is over with? Is UPS going to increase their business? Are more people going to be shipping things, or less people going to be shipping things because they'll just go to the store and buy it? So that's the part I really don't know about on UPS.
I think both ways. I think UPS will continue its strong core business, corporate deliveries, and but I think pandemic business. Of course, if there is no pandemic, it will grow. It will definitely decrease
Yeah,
its numbers. But the recovery economy will provide just as good, maybe even better opportunities once recovery will go into full swing. I think it is going. UPS, I think it's there to stay. Let's put it this way.
sure.
That's for sure. And
You know, I have a question about UPS and a comment. First of all, IBM. The thing, it's interesting because they've got a decent dividend and they're covering it easily. I looked at TD Ameritrade and E-Trade just now. They've got 11 and 12 cash flow, so they've got good cash flow to cover it. But the thing, there's a couple of things about IBM where I stay away from it. One, for the last 5 years, it's basically been going down, although it just swung back from 130 with the market. But it's questionable. Their sales has actually been on a -3% per year to annualized for the last 5 years, according to TD Ameritrade. So I don't know. I mean, they're competing against indirectly, Microsoft, Google, Amazon, these really dominant companies, and they may find their niche. It may be a good play. It's hard to say, but UPS, my only, I'm going to really look at that. It's interesting. It's got a 2% roughly dividend. It's easily covering. Well, it's got a 4% cash flow, so they can cover their dividend. I know Amazon started doing trucks more and more, and I wonder if that's going to hurt UPS at all or not. I mean, as Amazon does more and more deliveries themselves, I wonder how much business they take away from UPS. You know, I don't
I
know.
agree with you. There is a Peter. Remember that FedEx did a lot of Amazon deliveries, and then they broke contract with FedEx, and UPS became basically the major delivery option for Amazon, and it's still there. But you're right. It could be that Amazon will rely on its own delivery more and
You know,
more,
if they
and
keep adding trucks, what percentage of their business? We'd have to research this. What percentage of their business is Amazon? Because I don't trust that Amazon won't eventually, do most of that business themselves because they're aggressively adding trucks.
Yep. Yep.
You
So
know, I'm
I don't
buying a
know.
lot of products from Amazon. Those that are delivered by UPS, there is no problem. It's very well organized and works really well. When they rely on some small operators, it's pain in the neck to do that because they are very sloppy with delivery dates. They deliver, they don't deliver right to your apartment, or they can leave it at the
And
gatehouse.
who's
Or
sloppy? I'm sorry. You think Amazon is or UPS is sloppy?
no, UPS is not. Actually, UPS is doing a fantastic job, but
Oh,
the Amazon sometimes, actually not sometimes, most of the time, they rely on independent delivery companies. And these
well, yeah, but
delivery
they're getting
companies,
more and more trucks. There's a truck that delivers my stuff now that I order on Amazon, and I see the truck. So I know they're hiring very aggressively,
A lot.
giving people an opportunity, which is probably a very good opportunity for somebody who wants to make decent money to go into their own business delivering Amazon stuff. Go ahead, Roger.
All right.
yes.
I just want to say, Peter's point, here in Irvine, California, when I go for a walk, I see almost looks like 10, 20, 30% of the vehicles on the road are these Amazon sort of blue-gray trucks. They're everywhere, literally. I mean, they're just.
All right.
And the thing that I've noticed about Amazon is now they're talking about getting into the brick and mortar drug business and like really cheap stuff, like you get to buy 6 months worth of your high blood pressure medication for $6. And so if you look at the Amazon ROA, it's only about 6%. Every other metric on Amazon is through the roof. They're doing so well.
I
But
just got the answer.
they're becoming increasingly, to Peter's point on the trucks, in the brick and mortar of the drugstore's future, they're becoming increasingly very, very capital intensive. So that's just kind of an interesting thing to watch as they move more and more into that.
It is. It is. That's why I stay away from CVS and WBA, although WBA may do well in the short run, but I'm very nervous about margins. I read about WBA margins. There's a lot of issues with whether they can maintain them. And I already said, I go to CVS, I cannot believe the coupons they're giving away. They have a $10 for $5 a month deal where I pay $5. They start me with 10, then I get coupons. So I get $30 worth of stuff for about $7. And that's not a good business model, and prescriptions may be a threat to them too. But here's the answer. I love Google. I should probably reinvest in them. Sell puts or something. Amazon represents about 12% of UPS revenues, which wouldn't be devastating to lose, but still that's a lot. So I think over time, Amazon's going to say, why would we pay UPS anything? But that's only 12%. So UPS may be a very good play because I think, people will continue to shop more and more online.
Yeah.
It's a huge trend.
As I said, I would like to watch the stock UPS for the next few days, just to make sure that it still could go lower, by the way, so it will be even better entry point, or at least it will stay the same or even going slightly higher. Okay, that will indicate that the bottom, at least temporarily, has been reached, and you can probably take advantage of the situation because company is sound, it's well run, and yeah, you're right. 12% of its business might be at risk. And so now we are into two stocks. It's Amazon and Nvidia. So let's sell all the stocks and concentrate on this two. What else do we need?
I think Microsoft is unbelievable too. I mean,
It's unbelievable. That's right.
They're another huge winner. I sold puts on them at 270, and a lot of these times so far, I keep selling the puts and thinking, okay, maybe I'll keep the premium, and then I don't get to keep the whole premium because it goes through the put price, and but that's why I bought Amazon. I sold very high puts on at 4,500 this time because I'm just gonna, if it doesn't, I'll just redo it again in 2 years because sooner or later Amazon's dominant. They're selling a huge percentage of. I think they're doing, I forgot what it is now, 40 or 50% of all online sales, and they're getting better and better. They're so efficient. I cannot believe I can go into a UPS store, which they are working with UPS on delivery, and just drop the product off with a label, and I don't have to bring in a box or package it or anything, and they take it and give me a receipt, and I'm out of there. And it's just so advanced compared to the other online sites. I think they all have a future. I think, and I don't think anything will stop these companies. I want to mention Delta too. I've been saying it, love Delta, and
I like Delta. I like flying Delta.
Yeah, well, I do too. I think it's I like JetBlue, I like Delta, and I've heard other people say Delta's pretty good. It's my, but the I here's the thing. I have a friend who just does technical analysis, and he keeps saying it's going to 60 by September. And he's really pretty good.
He's right.
He's done very well, and it looks like it's just drifting upwards. But also, I also read some things. First of all, they're going to be profitable next in the second half. Now they said over the summer they break even, which I like because that means they have time. They're buying time. But now they're going to be profitable in the second half. Leisure travel is already at currently pre-pandemic levels, and also there's actually more future demand than pre-pandemic levels already for leisure. Yeah. Then you look at the travel market; it's surprising already, but the travel market is already up to 30% of the level. So there's huge pent-up demand, as we've discussed before, right, for business travel. Well, these people for business haven't traveled or made deals or whatever, and as soon as they can, they will. Plus, international travel, they're saying they're profitable, but international travel, they're still very restricted. The airlines this week went to say to the government, can we please fly? So to sum that up, 2 points. One is, I think that, and I read another article that I sort of agreed with, that maybe it'll go to 80 to 90 by 2023. But also, the best point I read was in an article where it said, this is business travel and is a free call on Delta, basically, because you're not paying for this because they're already profitable. And as business comes back, you've got an option, basically a call option on all this increasing travel all over and the huge demand. People are going to be paying premiums to go for leisure.
If you believe that the travel business is coming back, which is true, why not to look at the stock of Boeing? Because all these airlines, they heavily rely not only to buying new planes, but also maintenance of their older planes. So I think Boeing should represent the opportunity. Yes, Roderick.
I worry about Boeing because they just have such a terrible management team.
Their management's out of control.
Gosh, now they just announced they delivered Air Force One. There's another company that's going to have Concorde-like jets that'll get you to, New York to London in 3 hours or 4 hours.
Right, I saw that.
No plan at all to do anything like that. Those guys, just from a management team standpoint, you look at GE. GE had a terrible CEOs until they got this guy called, who was really good. And he's slowly turning into the model, he's saving it. But Boeing has still got a lot of the same old, folks that should probably be ushered out before they lose it all, to their competitors. I just don't like this.
But who are the competitors?
I was going to make the same point about, there's a few points. One is, I'd have to look at it, but I wouldn't be surprised if their unfunded pension liabilities are huge. Oh. That's why I've stayed away from some of these other airlines like the Grumman and Lockheed Martin stuff, because you look at their unfunded pensions, and they were huge years ago, and now with the low interest rates they're going to get, they're even bigger. And it may be bad management again, but also, you're hearing flights possibly, in half the time, flights around the world in fractions of the time in the next 10 years. So they're going to have to start, catching up with the technology and everything. It's going to be very competitive for these very fast planes that are coming into play very soon, in the next decade.
Yeah, but this popularity of 737, and they are going to sell a huge number of 737s. I think that alone will make them quite a lot of money.
Yeah. So do you like Boeing, Sasha?
Yeah, it's not my stock, but if I would look at the airlines as a concept, I think it all starts from Boeing, because Boeing is a mom and dad airlines.
Yeah, really, it's going to depend who produces the most fuel-efficient planes and the fastest planes.
Well, 737 is fuel-efficient, probably.
It is? Oh, good.
Right. Now, the fastest plane, I don't know, a long time ago they gave up on the idea to produce supersonic jets, although I think there is demand to fly London for 3 hours. I think it's a great thing, and people wouldn't mind to pay several times the premium. Let's see if you can fly there for a couple of $1,000s. A lot of
Yeah,
people wouldn't mind to pay $6,000, $7,000 to get it 3 hours. Really,
yeah. A 12-hour flight is very painful or more.
it is.
To go, Hawaii or somewhere from New York or wherever. I mean, there's going to be huge demand for that, but it's going to take time. But again, it's maybe eating away at them. But I'd have to look closer at Boeing. Again, I'd want to really look at the pensions too, because a lot of these airline-related companies just have been flying under the pensions are flying under the radar, and they're not. But I'd have to look at it. I'll throw a dividend stock out.
I love dividend stocks. What do you got?
Okay, so this is an interesting one. I was in it for a while. I did okay. Then I was out of it, and it's Antero Midstream. It's another pipeline.
What's the call?
AM. Now, because I had reduced EPD, which was a very small fraction anyway, but I even reduced it further because they're more oily. And I'm not sure, again, even that natural gas liquids I'm concerned with, because those prices tend to be with oil. So, it depends on how much will be exported and everything, but there's issues. But Antero Midstream is a battleground stock in my mind. So I bought 1/3%. First of all, it has an 8.5% dividend today.
Really?
Which is nice. And it did reduce its dividend a little bit in the last quarter or so. But it's covering that dividend right now with a 9 times price over cash flow. So it's really earning 11%. What I do, so there's something both sides. So I'm interested in what anybody would say. But so again, I put a 1/3% in because it's got a nice yield. So on the positive side, natural gas is the wave of the future in terms of energy, other than solar, because for so many reasons. I mean, most people know that by now. But also, Appalachia, where AM operates, is the least expensive place to get natural gas. It's called the Marcellus Shale. And so they can produce out of Appalachia very inexpensively. And again, there's huge demand in the South and Virginia, connecting to other southern places particularly, but there's huge demand for natural gas in the future. So the only negative was their parent company, two negatives. One, their parent company is Antero Resources, which last year was struggling a lot because gas prices went down to maybe $1.90, $1.80, and they needed to something just to break even. So there was a fear that Antero Resources would have to go bankrupt or cut back. Now, last I saw, I think gas is around $3, so it's good.
Right.
I don't personally think gas is going down, but it is subject to gas prices.
Sure.
And so that's one negative because there was that fear. The other negative, which I can't figure out, is analysts keep saying, if you look at the analysts, they say it's worth $8 or $9 a share. Today it's trading around $10.40. So, but the analysts will say, $8, $9 a share. A lot of times they're wrong, but that makes me a little cautious too. So, and I do have a lot of energy, especially in MPLX, which is now 10% of my portfolio. So I don't need it that much, but it's one where I think I'm probably leaving money on the table because I'll have to watch it closely. But I like Antero Midstream for a small bet because it's got 8 or 9% dividend that might last forever or increase.
Yeah.
Yeah, it's a really sound idea, Peter. Thank you.
Yeah, and those analysts, that's the reason I stayed out of Micron Technologies, because they said it's worth $8 to $9 a share. This was about 2 years ago. So I go, well, the analyst said it was $8 to $9 a share. I better stay out. Let's see how Micron is doing today.
No, I have to look 100.
Must be probably $90 a share or something.
I was close. Good guess.
Really? Right? Okay. Well, I'm serious. I literally was going to go into Micron stock at $8 to $9 a share.
Analysts,
yeah, the analysts say, okay, so I've stayed away from it. Okay, this is what I stayed away from because it was 2 years ago or something like that. Let me see. Let's go back 5 years. You'll see where I was looking at it. It was even less than that. I must have been looking at longer than that ago.
So here's my question, Nick. Was there any analyst who liked it at the time?
No, they were all saying it was a dog, and it was trading. I remember it was trading around $11 a share. It was way down here. Yeah, 1047. It was really down. And I was going, well, I should go invest in it. Then the analyst report said it's $8 to $9 a share. You don't want to invest in that. So I stayed away from it. I was going like, well, I guess the analysts know what they're doing, And now look at Micron, 79 a share, and I'm going like,
I was
even
looking at
today,
Micron Technologies when it was about $45 a share. It's a few
Yeah.
months ago. And at that time, there were a lot of uncertainty with the trade with China and all this Trump announcements back and forth. The stock was actually going up to almost 60, and then it would be backtracked to 45.
Yeah.
So on, and I stopped following that for that reason. But then
Yeah.
it did very well.
Well, the thing is,
Yeah.
they're out of Boise, Idaho, and I've been by their headquarters. I mean, it looks like a pretty well-run company. Everything that I thought said you got to buy it, and then the analyst report said don't buy it, so I didn't. And I really
every analyst report.
I hate analysts.
Yes,
Yeah,
I
right. Yeah, right.
I know. I should ignore them totally.
I worked as the senior finance guy for a company called Kingston Technology for 8 years, and they sell DRAM and NAND. So basically, memory company. No technology, no R&D. They just basically take those chips and then they put a skin around it, their USB, DRAM module, whatever, and they sell it on. So I have a lot of experience with the memory side of things because my whole career is in tech. And Micron is actually the last company in the U.S. to be doing memory. And there's only a handful of those guys elsewhere. Elpida in Japan went bankrupt. Samsung is really big. China's got a presence, but there aren't very many. The reason the analysts hate this stuff is because it's entirely commoditized. That's why Motorola went out of that business, and everybody else got out of the commodity chip business like that because you couldn't make any money. So everything that commoditized in microchips always goes to the Asia Pacific area where it's really high volume and really, really slim margins. But Micron's like the last guy. And the history of DRAM and NAND, going all the way back to the 80s, is it's extremely volatile. So when there are shortages, the price goes way up. And during other times, the margins are really thin. Well, right now, as you know, microchips in general, and that's one of the reasons this stock is up so high. So it's one of those plays where, right now it's really, really, really good, but that might change in the next 6 months as these supply chain disruptions begin to get sorted out.
Mm-hmm.
Yeah, so it's quite risky entry point now around $80. There is a potential it will go easily up to $90, maybe $100, maybe higher, but there is that downside considerable. In my opinion, it's $45, $50. Maybe that would be better entry point.
Well,
if it's wrong.
See, I don't mind taking a bet on an 8.5% dividend stock, Peter, as long as I get my 8.5. Because, like I said, then what I don't really care that much about. What the stock price is because you can't get 8.5 in the treasury today, can you?
And I happen to put it in an IRA. That's where I put some of these smaller.
Right.
Yeah. By the way, that's a corporation, not even a partnership. They used to be a partnership.
Yeah,
so,
and they're in a good industry.
I'm not sure of a company. I'll put it in the IRA because I get 8.5% back sooner. I get my money back sooner because I'm a little nervous about the future of energy, the changes and everything. But I think
natural gas is still going to be around. People consume energy, and see the thing is, there's all this myth that solar and renewables are going to take over, and it's a myth. What happens is there's going to be a continuous use of energy, and so I've been in energy for a while, and I like it because they always pay. I like it. Hey, Gwen, they always pay. I always like those dividends.
Yeah. Oh, yeah. Yeah. It's nice for a small bet, especially like I said in the IRA. I mean, I'm probably going to regret not having more of it down the road, but I'll watch it and see.
Yeah. Right. No.
The last thing what I'd like to mention about the motor vehicle stocks, Ford is doing quite well lately with the introduction of this electric truck, F-110. I forgot the name of that. And so the play, I have position in NIO, which is a Chinese electric car company. It's a poor man's Tesla, so to speak. So that's why.
It may be a rich man's Tesla.
Which one are you in? Curious. Are you in Xpeng? Are you in NIO? When you say that the Chinese EV, which one are you in?
NIO, NIO.
NIO. Yeah.
Yeah, that company, of course. What's interesting is that it has support of Chinese government, which is very
Yeah.
important because a lot of Chinese companies are struggling that its own government is attacking them from time to time, but not
Yeah,
NIO.
that's why I'm nervous about China. That's they just changed the rules. This week they just announced that parents can have 3 kids. For the first time, they're really pushing. They have a
Yeah.
huge demographic problem, more than the United States or the rest of the world, which has a huge demographic problem. They have so many problems because they were holding their babies down to 1 baby per family. And what they did then is, and a lot of parents aborted females because they said, oh, if we're going to have one child for economic reasons or crowd reasons, whatever, they wanted males. So they have a shortage of females. They want a 1.8% fertility rate. They're down to 1.2, and that's going to cause even a bigger problem for their unfunded liabilities down the road. So then you just have to say, well, when they get desperate, do you want to own anything in China as China gets more and more desperate over the next decade or two with struggling with their aging population?
Peter,
I
but
don't know.
don't forget that they have a wisdom of great communist party ruling the country, and they know what they're doing. They're always right. There is no opposition, and so
That's
they're
true.
enjoying the
But it's a political decision. It's not a sentimental or any other decision because I think people in China, they are not happy the way things are going on, and because of what happened with COVID and all those stuff. So it's a political decision. But I'll tell you, if you are investing in Chinese stock and if you are having chow means or noodles at evening, you are good to go because if you follow Chinese economy, I mean, it's perfectly fine.
It's true. You can't beat that 8% year-end GDP growth that they have over in China.
Yeah.
I mean, I would like to have more exposure to China, but it always seems to be a one-way street. In other words, it's almost like, hey, it's great to participate in the growth, but then how do you do it?
Yeah,
Really.
how do you do it and trust where you're putting your money when the rules can change and they just attacked Jack Ma. You just
I
don't
know.
know.
I saw what they did with Jack Ma. He was getting a little bit too powerful, so they
Yeah, exactly. So let's
pushed
crush
him
him.
back a little bit. Yeah, let's put him back in his place. Yeah, Roderick.
Yes, Roderick.
It's interesting that the governments of all the nations want to have the power, and they don't want competition, right? So these big tech companies begin to have too much influence. They have to do something. So what China did is they basically neutered Jack Ma and IPO to the anti-IPO. They made a decision. It was really decisive. Well, then you look at the U.S. We have the same problem. What do? We parade the big tech CEOs in front of Congress, and we shake our
Right.
hands and beg our fingers and insult them, and we tell them, you stop doing that, and they shake their heads in shame, and then they say, we'll stop doing that, and then they go back to business as usual.
Right.
So I ask you, who's more effective? Because you got to solve the problem. So
Xi Jinping. Xi
Xi
Jinping is very effective.
We know we have a problem with these tech companies. We know that they're too big. They need to be broken up. They probably need to be regulated like utilities because they're so ubiquitous.
They're unbelievably big.
So, but we're really inefficient and ineffective. So, they did the right thing, I think, in China because it was getting out of control and it was too much influence and it was a problem. We would like to do exactly the same thing. We're just not very efficient at it.
Well, but if you look at it, that's been our growth industry. Our growth industry, if we go after Google, if we go after Facebook, and we go after Amazon and NVIDIA, those are our big growth industries. We don't want to attack our big golden goose. Look at what their stock's done. Look what they've done. And then go look at some of our other industries. They haven't done jack. So Washington, D.C. is hesitant to attack the only place in this country that has actually experienced some decent growth.
Yeah, but you know what? Give us time because listen,
we'll do something stupid. Right?
Companies, no, I'm saying these companies. So many companies should not be getting involved in politics. It's so stupid and against their shareholders' interests. From a Nike who on one side uses slave labor and then pretends to be this, don't say anything in China, no less. These companies, they pretend to be righteous and then get into politics, so they alienate half their base. And you know what? But the thing is, they've alienated politicians on both sides now. And the Republican Party would have been a defender of some of them, but now wait till 22 and 24, because it's my personal prediction that the Republicans are going to take the Senate and the House in 22 and the presidency in 24.
Wow.
And
Okay.
that's what I believe very likely, and the Democrats are living in a fantasy world protected by the fake news organizations, although I have problems with Republican, with Fox and those two to a point because they're slanted. But, you never hear anything negative on CNN about any, it's so slanted. So, especially if you're international, by the way, I mean, it's crazy. So, but I'm just saying, I think people are fed up with the defund the police, the woke, culture, and they're just ignoring it because their media is sheltering it, but it's not going to work. The people see the results in the United States of these crazy kind of actions that moderates wouldn't like, and I think that's going to swing back, and then they're going to be like, wait a minute, what did we do? So, but these big companies will keep growing anyway, but they're going to have to make big adjustments too.
Yeah.
Peter, there is a group of stocks which are doing tremendously well, which are insulated from all this political winds of left and right and so on. It's a group of stocks. It's a GameStop. It's AMC. It's
GameStop,
other
AMC.
companies. So all these crazies are completely insulated from all those problems, and they're doing tremendously well. I mean, if you would invest in some of those stocks, you would do a
Or
lot
you
of
can go to
money.
Vegas, or you can go to Vegas and bet on red or black, because there's going to be just as many winners as losers, and in the end, it's a loser. Sasha, I think we may be running short on time.
Oh, okay. So thank you very much, everybody participating in our discussion. It's time to close up, unfortunately. But good news is that we will have show next week. See you all next Wednesday. It's a Pod TV, formerly IBN TV, financial show. Thank you very much, and have a good week.
Bye bye.
Thank you. Bye bye.
Bye.